So we do a show every couple of weeks or so where I talk about my various sell indicators that I'm looking at and when I'm going to sell 50 to 80% of all of my crypto and digital assets. And we do this every so often just to remind people that it's important to take some profits. Nobody ever went broke taking profits. But these videos, it becomes a little bit cumbersome, and there's actually an easier way to check all this off to when you could determine when it's the right time for you to sell some of your crypto or digital assets. So the video I'm talking about is this. We've done this multiple times, where we talk about selling Bitcoin, digital assets, and those type of things. And you can find that video in the link in the description of every single video that I do. It says why and when I'm selling 80% of my crypto in 2025. Now, hopefully this happens in 2025. And the idea is to, as I've laddered in, as far as like investing over since 2017, I'm going to be laddering out of the digital asset space. And once that happens, then of course I will step down from the channel and I won't come back until the bear market. Nobody needs a cheerleader in the bull market because that's when all the crazy things happen. The hard thing is to get people to really understand how powerful the bear market is to accumulate. So when that time happens, I will be gone. So I was looking through some things and I thought to myself, there's an easier way to do this instead of going over every single indicator that we go through. Now, there's two options for everybody. One's a simple way, one's a little bit more in depth, but this is what I found. This is from CoinGlass, and I've talked about this very infrequently, but it is a very powerful tool. And I'm going to link this in the description so you can find it. These are the bull market peak indicators when it's telling you like, hey, silly, this might be a good time to take a look at taking profits or selling everything. And I will just tell you that today we are in June of 2025. This is a pre-recorded video because I will be traveling. I will be in France this week. So this I wanted to put out before I left. So we can see here, bull market peak indicators as far as June 2025. Have we hit them? No. 0 out of 30 have been hit. Now, what are these? Well, they're a whole host of different indicators. They take the top 30 and say like, okay, not every one of these are going to hit, but when you start to see more and more of these actually hit, you can see like the Pi cycle top indicator, the reference ranges, Poyle multiple greater than or equal to 2.2. And you just kind of go down the list, MBRVZ score, Bitcoin bubble index, RSI 22 day. And you don't have to pay for this. It's a free service. So if you wanted like a down and dirty type of thing, you just found it. I gave it to you. So you can come through here and go, okay, there's some, maybe in the future of, towards the end of 2025, these might actually start getting checked. And once these start hitting, and again, they don't have to be all of them unless you want to, but once they start hitting and there's a big check mark there, you can say, maybe this is a time to look at selling. Again, very simple way to do things, just to look at it instead of going, hey, I think this is the top. Some people thought the top for Bitcoin was 80,000, then it went to 90. Then they thought the top was 100K. And it went to 110, then 111, then 112. So you get the point here. The point is to maximize those returns for you and to give you the best information that I can possibly have. So that's like a down and dirty one. You can look for this in the description. The problem with this indicators, all grouped together, is that when we click on something like, say, like the Pi cycle top, we can see here that it gives you some bit of data, but not really much to really go on. And it doesn't go back all the way. This is coming from actually, it's not even to the present. Looks like it's 12th of May. Today is the second week of June. And we're not into where we should be as far as the data. Let's see here. Yeah, 16th of May. It doesn't even get to the recent data. So that's not available to you. And it's a little bit of a laggard. So there is a problem with that. And yeah, a week or so could make a huge difference. But as time goes on, you can see like, well, the other indicators have hit. Me personally, if I wanted to really delve into it, instead of going here to CoinGlass, I would probably start here and see if, as these things are actually getting ticked off, and then go into, say, like Ben's website, into the Cryptoverse. That was a link in the description. There's 10% off your first month, and you can check that out. A lot of things that he has in there are free. Some are paid. I'm not for sure if the Pi cycle top one is, but a couple of them are free, but it just depends on the different chart. But we can see here, and it takes us to, the most recent June. Well, I guess it is 5th of June, 2025. We can see that yes, it is the most current. And we can just see that the Pi cycle top has been pretty well done. And it was created in 2019. And retrospectively speaking, it's done a pretty good job of course, looking at 2013. Of course, they were looking backwards, but in 2017, it looked backwards. But in 2021, not too bad, actually. When the 350-day moving average times 2 crossed over the 111-day moving average, it was not the ultimate Pico top, but it did a pretty darn good job. And you'd want to know that in the most up-to-date method. Also, you could take a look at the Puell multiple, the one that we've talked about. And this is just all about mining profitability. And you just take a look, say, okay, when were some of the big spikes here? Well, this is back in 2013, November. That was an all-time high. What was the big spike here? This was December 2017. Again, the all-time high. What's this over here? This is around March, April, actually March. And that was close to the all-time high. Actually, we hit the all-time high in November. Again, this is why you want to put as many as you possibly can together, because as far as the Bitcoin Puell multiple, it was a little bit off for that year. Also, we can take a look at the market value to realized value of the Z-score. This is it just compares the market value to the realized value, and the Z-score kind of gets out all the noise. And we can see again that if we take a look at these scores, you have it's 0, 2, 4, 6, 8. I think anything above 6, you're doing pretty good. Again, did a good job in 2013, 2017, 2021, March and April. Again, they missed it a little bit. And then there's other ones like the short-term bubble risk, which is also, we take a look at over here. But the short-term bubble risk, we can see that when things get a little bit heavy and red, 2017, 2013, was this 2019? Sure. 2021 in January. And we can just kind of see that, again, putting all of these different indicators together is probably the best thing for us. And then lastly, I will say, if there's a couple of things that you really want to delve into to make things easier, I mean, of course, the CoinGlass one is super simple. But what I like to do is go to Ben's site here, and we take a look at the crypto risk indicators. And it's an aggregate of all of the indicators, just like CoinGlass. Unfortunately for this one, it is a paid service. But you can see that you've got the logarithm regression, fear greed index, total market cap risk, Puell multiple, talked about that, MVRV, terminal price, and the social metrics. And we can see that over time, as we put these all together, you can just kind of tell when things were all overheated. Again, putting multiple different indicators together. 2021, way overheated. 2017, way overheated. 2013, we weren't, I guess they weren't tracking social metrics, obviously. But you can see that the price and the on-chain metrics was something to take a look at, as it was heavily overheated. And then lastly, if you want to take a look at like risk levels, this is one that I use consistently. And we can just see that today, XRP is a little bit higher, Tron. And if you're kind of wondering, like, what the heck is that? Why are we doing that? There is a link in the description where I talk about dynamic DCAing. You can watch that here. And again, why I'm selling 80% of my crypto is also there. But that dynamic DCAing would explain why these risk factors are so important to watch. And that's it for today. So look, if you like today's video, give it a thumbs up. Consider subscribing. Everything we talk about is extremely time sensitive. As we get into the 2025 season, we'll see where things go. That's it for this one. Thanks so much for stopping by. I appreciate you, and I'll see you in the next one.